Hello traders, and welcome back to another session of my YouTube lesson. So in today's lesson, what I'll be teaching you is a very simple strategy that you can use in trading volatility 75 and make $100 a day or $1,000 weekly. One good news about this asset is that you can trade 24/7, so you can trade it 7 days a week, and there is nothing like news where news will trigger any of your positions. And also with volatility 75 index, you can trade with as low as $1 and also use as low as 0.001 lot size. So that is the smallest lot size you can also use on volatility 75 index. Now these assets can only be found on Deriv. So what I'll do is that I'll leave the link to my Telegram page where I do give signals on this asset like volatility 75, boom and crash, and the rest, where you can also take advantage of. And also I'll leave a link in the Telegram channel where you can register on Deriv and also start making money with us. This is very simple. Stay tuned, I'll be right back. Alright, so on volatility 75 index, we don't calculate this in pips, we calculate it in points. And actually we took a trade, or I gave a trade call out to my community members, which we made almost 115 points on this asset. Okay, so the simple strategy I used in making this point is what I want to teach you today. And when you follow me to the end, you should also be able to analyze this on your own and also start making money. So the strategy I loved using on trading this kind of assets, it's order block or institutional trading method. Now what I do is I don't like complicating things. Now when you go on YouTube, you see a lot of people teaching how to trade institutional trading strategy, bank trading strategy, order blocks, and they make it very complicated. But when it comes to me, I try to simplify everything because I've already passed through the process. I know how it is very difficult for beginners especially to learn how to trade. So I try to simplify everything so that each and everyone can understand and trade with a free mind. So what I did was that when you look on this chart, this is volatility 75 index, and like I said, these assets can only be found on Deriv. So the link is on my Telegram channel. You can click on the link and start trading with us. And also don't forget to hit on the thumbs up button and also hit on the subscribe button. So this is us on volatility 75, like I said earlier, and you can see we are moving in an uptrend. So in an uptrend, what do we look for? We look for buying opportunities. So I first spotted my demand zone here. So this is our demand zone at this point. All right, so you know, when it comes to volatility, when it comes to this trading view, is not like our usual trading view where we do analysis on currencies and other stuff. Okay, so this trading view is also different. So if you want to have this kind of trading view on your laptop or wherever you want to be doing an analysis, then you have to look for tradingview.deriv.com. that is where you can have this kind of assets to analyze and then start making money. And on this kind of assets, we don't have a playback like currencies where you can play back. So this is the trade I took. You can see from here, I caught this trade from here to this point. Okay, so we are taking this aspect out. So we are starting our analysis from here. You know, even though as I drew the demand zone, but you can see price tapped in and then it started moving up. But what I'm trying to say is that this is not this is supposed to be a playback, but let's forget about it and talk about the current demand zone and how I was able to take this entry, or how I managed to know that price will come back to this zone and then start buy. So our demand zone on 24-hour time frame has broken the current the previous lower high at this point. So as you can see, we've broken the previous lower high and our trend has fully changed from this side. So what we'll be expecting is for price to come back to that demand zone and then do what, and continue buying. But like I said, this is the 24-hour, this is a daily time frame, so we need to move to the 4-hour time frame, or maybe the 1-hour time frame, or even lower, to look for an entry on and also refine our zone. This is a very simple strategy for each and everyone to understand. So let's move straight to the 4-hour time frame. And now when it comes to derivative, we don't have anything like the monthly time frame, the yearly or whatsoever. We only start from the daily time frame, which is the 24 hours. So right from the 24 hours, we move to the 4-hour time frame. On the 4-hour time frame, we are refining our zone to minimize our risks. So we are now refine the zone to this point. So this is now our new demand zone on the 4-hour time frame. So like I said earlier, because we don't have a playback on these assets, this is where actually price has tapped into the demand zone before I started my analysis. But what I was waiting for is to see where I can take my entry and then enter a trade. So this is the trade we took actually from here, the one in the box. That is the trade we took, where we caught almost the 40 something point. So this is the trade I took. Okay, so what we are going to do is now we are going to find out where we can get our entry and what triggered us to take a buy on volatility 75. Now when you look at this drop from here to the demand zone, we had price moving up from here and breaking this current supply zone. This is our current supply zone. This is our current supply zone over here. Okay, so this current supply zone is what has caused what we call the choke. So this is our choke because price has broken up and closing with a candle body, you can see. So this is the choke. So what are we waiting for? Once we have a choke here, it means that price needs to come back into that new demand zone that has been formed here. So a demand, this is what we call demand in a demand zone. So this is where we are going to wait to take our entry. So this is our choke and it has broken above, closed with a candle, which is already changing the trend around this area again. So we are waiting for price to come back to that demand that has been formed in the demand zone before we enter it. From here, we are moving to a lower time frame again for our entry. Now on the 30 minutes time frame, I am looking for my entry. So I've not gone lower than that. So previously on the 4-hour, I already drew where my choke is. So this is my choke on the 30 minutes as well. That is the same thing I drew on the 4-hour. And then I also spotted an IDM inducement around this area and an imbalance. Then we have our demand zone. So one of my videos when I was teaching how to trade institutional method of trading, or how to trade like the big banks, I need mention of institutional reference points where I talked about imbalance, I talked about demand zones, I talked about a lot of things when it comes to institutional reference points. And I said that these are the points where institutions pay attention to. And looking at this chart, we have a point where they decided to take their entries, and this entry was taken on the imbalance. As you can see, even though we have our demand zone around this area, this is our demand zone, 30-minute demand zone. So most of the institutional traders will be waiting for price to tap into the demand zone before they buy. But when you look clearly, you can see that the entry was taken on, look at this point, you can see that the entry was taken on the imbalance. So this is our imbalance here between 3 candles. So this is our imbalance at this point, and you can see that price has entered directly into the imbalance and then it started moving upward. So this is where we took our entry, which is also an institutional reference point. So when we took our entry from here, for now we caught almost let me use my long position too. So we took our entry from here. Immediately price entered into our institutional reference point, which is the imbalance zone. We took our entry. So we took our entry there to this point. So as at now, we are running in almost 43,914 points, and then our SL was below this point. So this is our SL and this is our entry. Our entry was here and our SL is below, a little below our demand zone. And now I am expecting price, even though we've not totally triggered our take profit. This is our first take profit. We've not totally triggered our first take profit. I am waiting for price to continue moving to this high. So this will be my final take profit, which would be almost 67,662 points. Like I said earlier, we don't use pips on this asset, we use points. So this is where my final take profit will be for Volatility 75 index. And this is a very good risk to reward of 1:8. So this is 1:8 risk to reward ratio. And even with our first take profit, we had almost 1:2. So this is 1:6 risk to reward ratio. So like I said, I'm looking at taking my last take profit at this one. And this signal was given to my community members. Everybody took advantage of it and we made money. So this is what happened on Volatility 75. In my next video, I promise to teach how to calculate lot size on your risks on Volatility 75. The lot size you have to use and what you'll be risking on each trade, or any entry you take, what you'll be risking. In my next video, probably I'll be teaching how to calculate that. So this is how we made money on Volatility 75, and this is a very simple strategy each and everyone can use. And as you can see, after I did my analysis, you can see this looks very simple. There's nothing complicated. I wasn't using any big vocabulary that will make you confused. Just things simple. Yours is just to open your eyes and find out where you can see all these institutional reference points. Thank you for following me on this journey. Like I said, I'll leave the link in my description where you can click and join my Telegram channel. And don't forget to hit on the thumbs up button and also hit on the subscription button, and also leave a comment below on whatever topic you would like me to treat. Thank you once again and peace out.